Ripoletto, and I am an open insurance innovation consultant and the partner of the Italian Insurtech Association, which is the Italian reference association for all the players of the Italian Insurtech ecosystem. The purpose of the association is to transform the Italian insurance industry through the use of new technologies and best business practices. And this is why we have organized this webinar on parametric insurance. Parametric insurance is widely recognized as one of those innovations that will play a central role in the evolution of insurance. And the novelty of parametric solutions is not in the parametric concept itself, as parametric risk transfer models have been around in insurance for almost 20 years. What is new and with potential to improve insurance is the application of the parametric model in insurance solutions for the consumer market. And this obviously is enabled by the growth in the adoption of new technologies such as Internet of Things and smart contracts. So today we have a very high-level panel of experts that will drive us towards an analysis of what has been achieved so far in parametric insurance, and we will try to draw an outlook for the next few years. So I would like to welcome our panelists, who are Ian Barbaroux, digital entrepreneur and founder of Autonomy, insurtech startup based in the US. Ian. Then we have Matteo Barbini, founder and managing partner at White Group. Gianni Biason, head of property and specialty solutions at Swiss Re. Matthew Grant, partner at Insurtech London. And Paul Prendergast, the digital entrepreneur and the CEO of Blink Parametrics. So the first point I wanted to explore with the panelists is the state of the art of parametric insurance. I would like to make a picture of parametric insurance today, particularly looking at its applications areas, lessons learned, regulatory critical issues. So, Paul, I would like to start with you. You founded Blink Parametric in 2016, so 4 years ago. I wanted to ask you if you can please start telling us about Blink Parametric.
Sure. Yeah. Thanks, Yuri, and great to be here. Hello to everybody in Italy. And so Blink Parametric, it's a technical platform, and our job really is to work with insurance companies to launch innovative parametric products. Our first product, as Yuri mentioned, we launched in 2016, was in the flight disruption space, working with travel insurance companies globally. We've launched with probably eight large insurers now, such as Manulife and Blue Cross in Canada. We're going live at Allianz in the UK in January. We're working with large OTAs, airlines, etc. So I suppose what we've learned is, Yuri's right, there's a huge amount of insight into parametric, but there really hasn't been the technology or the platforms to make this real into either SME or consumer lines. So as we say, there's no TPAs involved when we pay out claims. It's all automated. So that completely changes the business model, the types of products that can be developed. Number one, what Parametric does for consumers and small businesses, it's a much less painful process. It's proactive. There is no claims process. So that's a completely different experience for the insured, number one. And secondly, for the insurance companies themselves, removing lots of costs from TPAs, for example, out of the whole scenario, taking away the issue around moral hazard is a major issue that we've seen and we've done over the last number of years working with our partners. So Parametric will never solve everything, but it really has an opportunity to generate new types of customer experiences and new types of products. So flight disruption has been great, flight cancellation. We're now one of the companies in Lloyd's lab, and we're moving into commercial lines, and we're building our first commercial lines product, which is going to be a hurricane business interruption, non-damage business interruption product, which we're going to have built and demoing in 3 weeks' time. So we're very busy at the moment. but there's fantastic opportunity, and I was mentioned earlier on, the advent of data that's becoming more available means that there's huge opportunities. We're talking to people all the time about different parametric opportunities, and it's almost limitless. Once the data is strong and you've got a good technical platform to deliver this at scale, sky's the limit.
Excellent. Thanks a lot, Paul, for this introduction. Gianni, same question for you. You are a senior manager in the biggest world reinsurer, Swiss Re, and you've been involved in several parametric insurance projects. So I wanted to ask you if you can give us a view of from a reinsurer on parametric insurance.
Yeah, thanks, Yuri, and thanks, Paul, for the insights there as well. I totally share your experience as well on what we see. So parametric is nothing new, as you mentioned, Yuri, right? It has been there on the B2B area, in engineering, lack of sun, lack of wind, lack of water, in agro, drought insurance, etc. Also on the governmental side, so we have a unit that is called Public Sector Solutions that basically deals with governments and municipalities around the world. And they tend to buy parametric structures as well. And this is just to name a few. As Paul also mentioned, the digitalization, I think, has opened an opportunity to bring this B2B to the B2C world. And there are various products. I mean, obviously, being a reinsurer, we focus on large NatCat events like the tropical cyclone, like the earthquake in this world, etc. That can be used for, as a trigger for, as also mentioned, for named perils, non-damaged business interruption. But also to less common ones. For instance, the flight delay is a niche product, or there can be life and health products that can be parameterized as well. All the weather-related risks as well. There are three lessons that we learned there are lessons that we learned that there are three key contributions to the success. I think 3 dimensions, how we call it. The first one is the IT dimension. So you need, the scalable IT platform to allow to manage these policies. The second one is the underwriting angle. So you need, to design the product, to price the product, but you need to take into consideration the legal aspect, the regulatory aspect, so all these things. And the third one, which we feel is probably the most important one and the most difficult one, is the distribution. So, and that includes consumer protection, also sales. So how you actually sell this. And we find that very, very hard, actually. There is hardly any company that brings all 3 of them. So what we do is we cooperate on areas where we are not strong enough, and on the B2C side, obviously one of the biggest hurdles is the basis risk. So the risk that the actual payout does not reflect the actual economic loss. That's one, and correlated to that, the reputational risk of an insurer, right? In particular, when there's negative basis risk, so you're not paying out despite the fact that the client actually had a loss. And I'm happy to announce just today, we announced that we just closed the deal today and announced it in the US. We partnered with a large software company that sells parametric earthquake insurance to corporates via this alternative distribution channel, which is this software company called Intuit. And that was just announced today, so I'm happy to reveal this exclusively through this channel.
Excellent. Thank you also for this news. And one thing, do you see any difference in terms of distribution? Have you seen any difference between online distribution and the distribution through agents and brokers? Do you think that one of those is a better fit with parametric than the others, or they are both good and feasible distribution channels?
Yeah, they can both be good and both be bad, right? It really depends on how you sell it. Sometimes it's minimal things, right? It's how you market it. It's is it in the consumer journey of another product? So is it linked to another product? So like what Paul mentioned, the flight, if you link it to a ticket sales product, right? So it's embedded. It has a certain conversion rate. If it's, if it links to another website, the conversion rate drops dramatically. So it depends on little things and pieces. And we have not found, I wish we have not found the right spot on how to sell it best. But I would not generalize it, whether it's better with this or whether better with the other. It really depends on the product, on the market, on how this product is sold.
Excellent. Perfect. Thanks a lot. Matteo, You are a co-founder of a big brokerage in Italy. Can you give us your view of parametric insurance from the point of view of a broker?
Sure, Yuri, and thank you, Gianni, for the congratulations of being a broker distributor. The point of view of broker is very similar to the point of view of the client. I've been looking at parametric insurance for 6 years, and I always ask myself, if the logic is so easy, it's so simple, it's applicable to large amount of clients, and it's transparent, why is it complicated to sell? So the classic response is education. So the education of the broker, education of the client. But we've been talking about education for the last 6 years, so it can't be the only reasons. And you start to think, and the big monster, the beast to conquer is the point of sale. So I'll try to organize my ideas in 3 vital points. We need to demonstrate to the client, and the market needs to demonstrate to the broker, because it's practically the same thing. The moment you convince the broker, if he's a good broker, he'll be able to sell. The fact that parametric insurance is an intelligent way to invest the money and not the costs, like most clients see the insurance. So the 3 most important things that I believe is, one is perception, and Gianni just mentioned it just before, is the trigger of the parametric basis compared to the real loss. And let me do a quick example. We insured a couple of years ago a hot air balloon fare, and the client decided to buy excess of 2 millimeters of rain. And that day it had to rain 1.8 millimeters of rain. So the perception of the client was, I had a loss, insurance will pay. But the trigger was not met. And that creates a bit of complication before the sale and after the sale. Similar thing on the agricultural section, let's say a cloud burst of 69 millimeters compared to 71 with a trigger at 70. So these 2 examples bring us to one thing, the correlation. So if we're able to demonstrate to the client that there is a direct correlation between historical data and losses, then we're able to win. So the one thing is the perception. Second point, and Gianni said this as well, currently we have distribution costs, and I'm not even talking about acquisition costs. Looking at distribution costs, we got the broker commission, the MGA commission, underwriting costs, taxes. In Italy, as this has been promoted by the Italian Insurtech associations, taxes, apart from agriculture, is 21% of the premium. This amounts and doesn't allow competitive quotes to go around because there's too many people involved. Sometimes another issue for pricing is historical data. If you have 20, 30, 40 years of historical data, with good underwriters, you'll be able to get to a premium that makes sense. If you don't have the data, very complicated to quote. The solution, clearly technology helps us. We were talking about just earlier on about B2C or B2B2C or embedded product. If we were able to provide an Insurtech environment and to provide API connections between underwriting, every will cut their costs because there are no costs, and the client will be able to understand this. Third, but not least as a problem, is data access for claim verification. So some of the issues we had in the past is going to clients and try to explain that the weather station was 3 miles away, or that the satellite company was in the United States and would provide the data, but, and there's a but. And this is another point that technology will help with sensors, with drones, with mobile phones, with transparent data online that is available to the client live. So I'm one of the biggest probably believer of parametric insurance, and I believe the current situation will increase and will accelerate the position of parametric insurance in our market. I believe us as brokers have a massive impact, and the biggest integration of us or others, obviously, and the underwriters. If we're able to create a connection between the two, I believe in the next 2 or 3 years, we'll have some success. So this is my point, Yuri.
Excellent. Thanks a lot, Matteo. So I think that if there is one aspect we can all agree is that parametric insurance shall not be intended as an alternative model to traditional P&C coverages, but more as a solution that can fill specific gaps and fix specific issues in the traditional insurance model. Gaps in insurance coverages, but also gaps intended in the wider meaning of protection gap, for example. And issues not only in terms of claims assessment time, but also, for example, in terms of customer trust, which is one of the metrics where insurers do not excel, are not outstanding very frequently. So, Gianni, I wanted to start with you this second session of questions, focusing particularly on the commercial lines market. What are, in your opinion, the benefits that a commercial customer and its insurer can achieve by using a parametric product? So, for example, let's take a business that is insured with a traditional or risk policy. Is it, in your opinion, a parametric policy a good solution to fill the gaps or to fix the issues of a traditional P&C or risk policy?
Yeah, let me start with the following statement. Basis risk is not only an issue in parametric. Basis risk is also there in traditional, even in all risk policies, because even all risks policies have exclusions, have deductibles, etc. So I can have a loss, and it's exactly the reason of that loss is excluded in my policy. Or I can have a loss where the loss amount actually is within my deductible, right? And so you even have a basis risk, or whatever you want to call it, right? Technically maybe you can call it differently, but let's say it's similar to a basis risk where I have a loss, but it's not considered by the insurance company and the insurance product. And I think that's where that's a good add-on for a parametric product. So when you look at online, when you look at all these tech companies that offer this, they often promote it as deductible, buy down of a deductible, or if this is excluded, parametric will step in, etc. And so I see a lot of value there. With corporates, though, it's slightly different, right? So on the B2C side, the main issue is, or the main advantage, one of the main advantages, you get the money immediately. So the immediate payout is not that important on the corporate side. So that's less important, because sometimes, they say, we have enough cash, right? You don't have to send us immediately all this money, right? But what they say is the transparency. So, easier to plan, obviously, and certain risks that are not insurable otherwise can be covered via parametric structures. And I think these are the main aspects when you talk corporates, which is slightly different than when you talk personal lines, I think.
Excellent. Can you just make an example of coverages, risks that are better insured with parametric than with the traditional insurance? Just the last point you mentioned.
I think if you take governments, for instance, right, it's very, very difficult to calculate what the loss amount is when there is an earthquake for a government, right? How on earth would you would have to send out, I don't know how many claims adjuster. So for the sake of easiness, they just fix an amount and say, this is amount, let's agree on this amount. So it's like a pre-agreed payout amount on something that otherwise would be very, very difficult to come up with a loss amount as such. You still have to prove, right, that you have an insurable loss, that you're not making money out of this, right? But it simplifies the whole discussion, and it simplifies the calculation of the loss in that sense.
Excellent. Thanks a lot. Matthew, you have recently published a very comprehensive research on parametric insurance that you will present later today in this webinar. You have made extensive researches in this field and dealt with several providers of parametric solutions and insurers using these solutions. What are the main benefits provided by parametric insurance that traditional insurance can't provide? Your microphone is switched off. Okay, perfect.
Thanks, Stuart. So we've covered a few of those already, so I'm not going to give a full catalogue, but the ones that come out quite strongly on this that I think are going to be driving this market, the first one is those areas that are difficult to cover, and Gianni touched on those a bit, but things like non-damage business interruption, where there's not necessarily a physical loss, but is a big loss to an organization are now a big focus. And I think we're going to see more happening around that. I think the second one is it actually opens up access to new capital. So we're seeing companies like Global Parametrics that have got funding by development organizations and governments to provide support for risk financing, and they do that through Parametrics. That point about the faster payment as well is, it's less important for corporates, but actually it is very important for personal lines. So, for example, Jumpstart in California providing $10,000 within 24 hours of an event if somebody's in a red zone on the earthquake map, and that's really just designed to help people take action to reduce losses getting any worse. And you actually see that even happening before the event. So there's companies like 𝐚𝐬𝐬𝐬𝐤𝐬𝐬, also out of Ireland, who are looking at providing funding in advance of hurricanes making landfall. Global Parametrics have done this, so people can do things like starting to protect their properties with sort of cash that's provided straight away. And then I think that also, the other area it helps is just the whole understanding of risk management. So in a sense, Parametric can simplify how people think about their loss. So another example is Flood Flash in the UK, who are providing sensors for buildings for small businesses. Now it's expanding to larger businesses. If you've got a sensor stuck in your building and you already understand the flood risk, but now there's a direct linkage between your flood risk and your loss, it just raises awareness of people and helps them with that risk mitigation thing. So I think there's a much stronger connection there that comes out from this. And then I think finally, and it's sort of very timely given the Swiss Re announcement with Insurtech, but it actually opens up more access for new companies out there, or companies providing data that can collaborate and partner with insurance organizations and capital providers to find new ways to reduce the risk that might have been harder to get into in a more traditional insurance area.
Excellent. Thanks a lot, Matthew, for these insights. Jan, let's give a look now at the personal lines market. You have a big experience within the capital markets industry, and you have been dealing with index-based solutions in that market. And you have recently founded a startup, Autonomy, that is launching solutions in this area. So can you please present us Autonomy, your Insurtech startup, and where you see the potential of parametric solutions in the personal lines market?
Yeah, thanks, Yuri. You guys can hear me, right?
Yes, perfectly.
Perfect. Thanks everyone to be on the panel. It's an impressive suite of experts on the call. So I'm going to be starting with a very short personal story. So I moved from France to the US about 20 years ago, and I remember using some wire transfer, to transfer money from my European account to a US account, and it would take sometime 5-7 days, 2 weeks. It would cost me close to $100 to achieve that transaction, and having 3 to 4 people in the supply chain that was very very difficult and cumbersome. Last week, as a comparison, we received money from an investor based in the UK. The Revolut transfer was done in 16 minutes and cost only $1. So I believe that parametric insurance and the Insurtech industry is going to be transforming dramatically. And we're going to see that distribution and also risk management is going to be very well impacted. So at Autonomy, our mission statement is simple. Our end goal is to make the claim process disappear. And the way we implement our solution is a plug-and-play claim automation platform, which follows a parametric insurance model. And our value prop is very simple. That can be summarized in 3 words: detect, activate, and pay. So we are a multi-vertical SaaS solution, and we connect with distribution platform in travel, hospitality, to reach retail clients and personal lines policyholders, to offer flight delay protection, but also COVID-safe parametric coverage in the short-term rental space and Airbnb, integrating IoT devices. So we got to be real. Clients don't have the bandwidth for claim submission anymore. And parametric coverage greatly help resolve this. And what parametric insurance is good for, and our models and others too, follows what I call an STI model, so simplified, transparent, and instant. And counterintuitively, that digitization will not eliminate the human element in the equation, but instead will create room for insurance players to listen to their customers even more and improve UX to a much higher prospect. So future prospect in parametric insurance will not only help existing insured clients, but also the uninsured. And we believe that it would help bridge that gap at a scale. And currently with the COVID-19 and the pandemic, which is very sad and devastating event globally, but in a sense we believe that's a wake-up call for the industry. And we definitely see a silver lining for innovation and tech owners such as us to step in and make a difference. And event cancellation and business interruption, as mentioned prior, has been very devastating. Customers have been suffering the brunt of policy, fine prints, legal conundrum, and horrible lengthy processes. And we know that billion and billion dollar will never return to clients where they're eligible to. And I believe that this is a tectonic shift for clients and users, which are expecting how insurers will service them. And it's very visible in the market right now. So as per Reuters in a recent article, there's already like close to a 700% year-on-year hike in travel coverage demands. And this is something that's front and center for everyone. And we believe that's here to stay. And in terms of distribution, my belief, coming from the fintech, capital market, is distribution is going to go through, fintech and also tech fins. And I apologize for the barbaric buzzword, but distribution was started through the FANG and the GAFA, such as Google, Amazon, and so forth. And this financial services provider, definitely are going to be helping with distributing those policies. And for instance, like the mobility and transportation, let's say Uber, for instance, will have some sort of silent actor in the Insurtech and parametric insurance that's going to be helping covering people without them knowing. And at the end of the day, what matters for people is like getting their money back or getting some claim back whenever they need it, right? And with autonomy, we're doing exactly that. We create a very plug-and-play platform where we integrate a bunch of digital platform in terms of processing of payments, such as Stripe, Mango Pay, and Wire, and we enable for digital currency to be integrated as well because we blockchain native, and therefore we think we're going to be opening up for open finance in general.
Excellent. Thank you, Jan. Paul, Blink started with solutions focused on the travel insurance market. Mm-hmm. And now you have extended the range of solutions. So I wanted to ask you, based on this experience and on the feedbacks and the requests that you receive from your insurance partners, what is for you the USP of parametric insurance? Which are the benefits? Why insurers are keen to engage in parametric insurance projects?
Yeah, thanks, Yuri. I think there's a couple of big reasons, and as a number of the other panelists said, COVID-19, I think, will be a force for good in the long term. A lot of insurance companies are looking to innovate now and change the product proposition. I think Matteo made some really interesting points talking about the correlation between the trigger and the actual event. So that's really what we're focused on in our business interruption product that we're launching in 3 weeks. So effectively, and the other piece that's been mentioned quite a lot is basis risk and systemic risk. So what frightens most insurance companies is you have a parametric trigger that happens, and then it's hands off and a payment goes out and nobody has control over it. And so if you've got a situation where thousands of businesses are getting paid out with no stopgap, and it's all done automated in minutes before somebody gets to press the red button and say stop, that's frightening for people. So our new product is, although focused very much on the customer experience, it's removing systemic risk. So we're integrating using open banking and different data points so we can prove that the hurricane has actually impacted on on that particular business. So you'll have business A, we can prove that the hurricane has a material impact on their revenues, and business B, which is right beside it, they won't get paid out, because even if you see COVID-19 right now, lots of businesses have been impacted badly, but lots of businesses have done quite well. So I think insurance companies are very hungry to innovate, but a lot of them in this space have said, we want to do something, but we can't throw money at this. It has to be profitable in the long term. And the only way you can do that at scale is using technology. And so using technology in a different way. And that's the business interruption, non-damage business interruption, as Matthew mentioned, but using the impact, knowing that the actual impact or the peril has actually impacted that business. That, we believe, will take out a lot of the concern around parametric, particularly in the larger commercial line space. So we're currently, obviously, we have a lot of experience in flight disruption and delay. We've done that for years, worked with a lot of large insurance companies. I do think that we've done embedded programs, we've done API integrations, we've done the invisible insurance. So it's getting that message across to the consumer. We find that once the consumer, the small business, experience parametric, they're completely floored. It's an amazing experience for them. It's completely opposite to what their expectation is. So it's not once you launch that type of product, it's not very difficult to differentiate your product in the marketplace. And just one last point, I think we're big believer in hybrid products, that you take your parametric and you meld that together with your hybrid product, with your indemnity product, and both do different things. The first, the parametric, gets money quickly, great customer experience, and it's perfect for fast, quick. Then indemnity then really kicks in when it's more sophisticated and it's larger amounts of money. But you can bring those two together quite well, and we've done that already. And I think that's where that is a possible way of getting around some of the distribution challenges as a standalone parametric point solution, if you like. Okay.
Very interesting, this view on these hybrid solutions, effectively, yes. Thanks a lot. So now let's look at the future. So we, unfortunately, all of us, we have seen how a pandemic have dramatically changed our lives and put big question marks on many of our certainties, starting from our health, which till 9 months ago we gave for granted. Starting from pandemic, but not only regarding that, there are big forces that are changing the world we live in. So think to pandemic, think to climate change, think to cyber risks. So obviously this has an impact also on the insurance industry, which at its core benefits society by protecting individuals and businesses from adverse events. So thinking to the big global phenomena that are changing the risk landscape where insurers operate, my question for your panelists is, do you think that parametric insurance can be a solution to help insurers be more effective at achieving their mission, which is protecting individuals and businesses from adverse events? So, Paul, what's your point of view in this regard?
Surprisingly, yes. So I think and I think it's been mentioned quite a lot. If you take weather and climate, it's obviously going to be that is going to be the issue over the next 20, 30 years. There's huge experience in the insurance space on hurricanes or floods, etc. Amazing stuff, but they're all large enterprise deals typically. So it doesn't stack up to for a micro business or turn that into a personal lines, and primarily because it costs so much to assess claims and put it through the machinery of an insurance company. Whereas if you use a parametric and technology to do that, and you take people completely out of it, suddenly you all that insight that you have on whether it's energy or hurricanes or floods, you can turn it into a scalable parametric product. So I think it can, and I think it'll open up a massive amount of opportunity for small businesses and consumers to get this type of parametric climate products, but it can only be done using technology.
Excellent. And particularly wanted to ask, what's your point of view regarding cyber risks? Do you think that Parametric can be a viable solution for cyber risks or not yet?
It's interesting. It's interesting. I've seen some interesting cyber parametric products out there, but they tend to be incredibly narrow. And the issue is, what peril are you actually protecting against? You've seen some interesting parametrics launched quite recently. If certain key services are down, they'll kick in. That's interesting. Yes, but it's such a wide area. I think we would probably focus not so much on the cause of this of the bad actors, if you like. It's what's the outcome. It's almost the approach we're taking with the hurricane. Does it actually impact your business? And that's when the trigger should happen, as opposed to somebody accessed a port on a router. That's cyber attack, but does it really impact your business? Perhaps not. So it's the outcome. So I think it's definitely an emerging area. I think certainly Parametric can help again with the high frequency, low severity type space, when somebody needs $500 for an expert to come in for an hour and sort it out. I think that's ideal. But yeah, emerging space, but I don't know if anybody has nailed it down just yet.
Perfect. Thanks a lot. Matteo, what's your view? How do you see parametric solutions in the view of the big phenomena that are challenging our businesses and our society?
Well, as big phenomena, I wouldn't even talk about the pandemic, because I believe Parametric is the perfect fit for the new distribution models. We've seen the last 10 years, massive companies buying shares of the market, not even looking at insurance, by changing the distribution models. And it's all insurance has IT embedded, is the perfect fit for that. Now, this pandemic has brought probably an acceleration on the IT side, and from the investments that are needed in the product's research and the investment in innovation, probably it will grow that. It will create, I'm talking as a broker, a little bit of an issue on the clients, because we are on a full economic downturn. It's always complicated to go to clients and sell additional products in a very bad or slightly bad year. However, talking about, and I've seen it mentioned a few times early on, the distribution model has this concept of embedded product, of additional product that will allow parametric insurance to grow hopefully as quick as cyber insurance has grown in the past. You mentioned two kinds. One is the COVID-19, and we could probably split on the cost side is the business interruption. So this year we've seen a total downturn based on the business interruption. We've seen lawsuits in the States that clients try to sue insurers, convinced that with no material damage they would due monies. And we've seen in Italy an insurance company that tried to create a small parametric insurance based on lockdown, and then stopped the product after 10 days. That is massive. The concept of business interruption is at the basis of the investment that will need to go on innovation. Before COVID, on the papers, we could only read SDGs, so global warming. And there are so many areas of that world where Parametric can have an impact. It already has an impact on the reinsurance side and some direct clients, but it will have an additional impact, looking at green energy, the wind, the solar, the agriculture and the livestock, on the weather side, and looking at future hedges on the commodity, on stocks. So just to summarize, firmly believe it's a moment of acceleration. Economic downturn creates a few issues when you go and sell the product, but it hopefully will allow increase in investments. The only way is an increase in investments, especially in my country. So this is very, very important.
Excellent. Thank you, Matteo. I forgot to tell one thing to the attendees. If you have any questions for the panelists, you feel free to write down the questions in the chat, and we will revert them to the panelists. Gianni, what's your point of view in this regard? So at Swiss Re, you have visibility to all the biggest effects of climate change, not only that, say, catastrophes in general. So what's your point of view in this regard? How you see parametric insurance for cat and events, for cyber, for pandemics? What do you think?
I would be a fool to say no, right? But I think yes, it's a part of the holistic approach. So when you look at the 3 dimensions, I'm always using 3 dimensions here, but you can split the need of a client into 3 parts: pre-event, during event, and after event. I think parametric is great after the event because there's a quick payout, right? Pre-event, it's also good because it covers certain risks that may not be covered otherwise. You know, there is transparency if, you know, everybody understands how it works, right? During event, yeah, I'm not sure, but you can use parametric triggers to inform the client of what has happened, right? So there is transparency there as well. So definitely yes. As I said before, right, it's not going to replace, at least not in the short term, going to replace traditional insurance products. And in that sense, it's good. It will not resolve all the issues because you know, with parametric there are other issues that have to be resolved, like the basis risk, like the reputation risk, like, you know, creating an index that is simple enough for the client to understand. That's also a big challenge, right? So, you know, using earthquake and, you know, using shake intensity as a trigger, try to explain what shake intensity is not the same as Richter scale, right? And it cannot be, you know, deducted from Richter scale. So these are the things that I think are really key and are the next problems that we will have to solve, right? To basically make everybody aware on how it works, so everybody has an understanding and is not surprised, as Matteo mentioned, I think it was, with the example of, oh, it was only 1.8 instead of 2 millimeters of rain, but why am I not getting a payout? Right, so that clear message on what has happened and why it's not a payout, I think that's very important, in particular with people that are not that experienced, which are on the personal lines in particular. It's, you know, it's less of an issue, but also an issue with corporates, but at least you talk to experts there, not always, but usually. But I think it's more important on the personal line side.
Okay, perfect. Thanks a lot. Jana, you previously mentioned that your startup is launching a parametric product that targets the effects of quality of air and driven by COVID-19. So can you tell us the rationale behind this product and how it works?
Yeah, thanks a lot. So we view at Autonomy parametric insurance as very much a risk hedging tool, right? Both for the end clients, being retail client, personal lines, or commercial, being corporates. And in that capacity, you know, I'm coming from risk management and capital market, that's Citigroup type of background. So for me, it's very similar to a financial derivative. The way we design it, and it's all about, you know, getting some compensation, some financial advantage to the policyholder, regardless if it's the exact loss that we're talking about. So in that capacity, as long as we can streamline that process in terms of detect, activate, and pay, this is the benefit that we want to bring to clients. And to that effect, you know, there's 2 things that are very important in our model. Is the input of data that's being facilitated by our Oracle, which is communicating with our smart contract, and we are partnering with Chainlink, one of the prominent blockchain company. And in that matter, we can definitely roll out multiplicity of products. So one is through Open API for flights. The other one is through IoT, right? So that's to your question. So the IoT integration is something that we believe very strongly for the future, because the devices and technology is going to be cheaper and cheaper, and it's going to be easier to install, easier to roll out and send by FedEx, to be installed by the property owners themselves. So in that case, we're already working with Airbnb, Vrbo, and other players in the short-term rental space in order to set up IoT devices that can sniff parameters on a quantitative standpoint. So air quality control, clean staff presence, noise control, presence of illegal parties for property owners. And we can set up the parametric policy of the future, where we have a new set of parameters that can be checked and that can activate certain threshold and therefore pay either the property owner or the end clients, which is the guest in this case. And that's being made possible because we have full connectivity with open API and IoT devices being fed through our smart contract. And I think it's very important to think about the way in, but the way out is also very interesting for the next 10 years, because when you start building those new emerging policies for end clients, you create a new data set, right? So a new pricing patterns, a new way of ranking certain, let's say, rental units, if they have a lot of violation towards those policies or not, and a new way of printing some actuarial premium and claim payments in order to essentially monetize this data on the back of it, right? And we're creating a statistical model and machine learning analytics in order to better the prediction and also the end pricing for the client.
Okay, thanks a lot. Thank you very much. Matthew, you have recently presented the research on parametric insurance. Can you tell us something about it and the most important discoveries you've made studying this topic?
Yeah, thanks, Yuri. So just the background to this was I've got about 25 years of experience, which included parametric along the way through the large catastrophe bonds. And what was interesting sort of in the last couple of years is this emergence of parametric insurance as a concept. But like a lot of technology or seemingly new ideas, it's quite difficult looking at it externally to get a context of what does that mean related to what else is out there, what technologies are coming forward, and who's doing this. And so I wrote a relatively short article back in April on this and profiled 10 companies to take a look at. I'm delighted that 2 of our fellow panelists were in that. And I had a huge amount of interest, including about 40 companies that told me they should have been in the report. So clearly there's an interest in education around this, and we've talked about education already. And so really what the report does is it sets out to look at the history of parametric insurance, look at it across different lines of business from insurance, and actually take a look at who's already well established in that space, companies like Swiss Re or Munich Re or Hanover, from an insurance perspective, but also who's working on things that are going to be some of the future, like Jan or with Blink. And just picking up some of the themes we've talked about, or rather we haven't talked about, because we've covered a lot of the topics already in here. But I think some of the findings from this, that just building on what everybody else is talking about, which is sort of worth bearing in mind, is that one of these is that data is now becoming either cheap or it's free. So things like the USGS data I mentioned before for earthquakes in California, people can tap into that for free. And there are lots of examples out there, either directly from government bodies or what's known as data exhaust, where it's possible to build a parametric product on the back of data that's free, which actually makes it much more accessible. And that, coupled with some of the analytics that are coming out that are also easier to do, and some of the other technologies we've discussed, means that there are more and more opportunities out there that we're seeing for parametric insurance. But it's already, on one hand, it's the good thing, it's already proven because it's been used for, in some cases, hundreds of millions of dollars of transactions for these catastrophe bonds. But there also is a warning in there that, some of these have actually not worked out as they should have done. And if you look at smart contracts and distributed ledgers and how those work, there's a bit of a warning in there that there's, in many cases, there still needs to be some human intervention. And again, Paul sort of referenced this. Someone needs to be able to hit the stop button and actually validate or calibrate some of the payouts so we don't go too far and end up with unexpected consequences. I think it's also, if you look at this, what's very encouraging is that we see 2 ends of the spectrum. We've got very large companies like, again, Swiss Re, who are both structuring deals, but actually are also investing a lot in terms of education and data and just facilitating this overall marketplace. But we also see the access for companies coming in. So you've got organizations like Arbol, who are looking at, amongst other things, agricultural risk, who did something like 200 transactions, they just reported recently, in about 4 months. So very rapid ability to be able to deploy what they're offering into the market. But a big caveat to that, and Matteo mentioned this, and Gianni mentioned this, is its distribution. And the one thing that comes out very clearly when we look at who's out there and what the success has been, is it's been a real challenge of whether it's corporates or personal buyers, not just understanding what Parametric offers, but also just how do you put it into their hands. And it's not solely an issue for Parametric. I mean, there's a reason why Lemonade are spending something like $100 million on marketing for the premium income out of the same as that. It's because it's very, very difficult, as we all know, to get noticed by the buyers of insurance of any kind. And when it comes to Parametric, it's particularly challenging. I think another theme that sort of comes out, and it's again being reinforced by various people today, is this basis risk. And my thinking on this, and what we're seeing with people offering solutions, is if there's an insurance product or an insurance-like product being offered where there was no alternative before, then people will accept the basis risk, particularly if it's not binary. So you can have basis risk where the loss isn't necessary. Sorry, the payout isn't necessarily the same as the loss. And then you've got the other ones that, again, Matteo referred to with his balloon cover, where you go from, you don't get anything. And I think the market has to think about developing parametric triggers to make sure that people don't get caught up in what we've seen in the COVID situation, where people thought they had cover and actually didn't get cover at all. So it's a bit of a warning and a thought in there. But I think what I wrap it up with is, I say the Parametric has got applications across every industry, and it's a slightly gruesome example. But if you look at health and loss of limbs, for example, there's a certain kind of health insurance, pay out if you lose an arm or a finger, and it'll pay you out different amounts. That's been there. We've got things like Playbrush, who have got now connected toothbrush that you basically, on the back of how many times you brush your teeth, you'll get discounts on your insurance. I mean, there's no end to the creativity out there, which is really encouraging. So if anybody wants to take a look at the report, it is purely there for educational purposes. It's not comprehensive. And we didn't get your one in there, for example, so we'll get you in there for the next version. It's available to download. We put a link in the invitation for this, but anybody who wants to get access to it, please do let me know. It's free for the next few weeks. So, and I always welcome feedback, anything I missed or any ideas for the next one. But, thank you, Yuri, for the chance to talk about it.
You're very welcome. It's a pleasure. We have a couple of questions from the attendees. The first one is for you, Gianni. What are the two first things that you look at when you evaluate a parametric solution? So I suppose it relates to opportunity to launch a parametric product proposed by an Insurtech, for example. What are the first things that you look at? If you have to say yes, go ahead, or no, we are not going to do this.
You mean out of the 20 things that I have to select two now?
The first two.
I look at the business potential. Right. So what do I think? How many policies are we going to sell? Is it worth the investment? Is it a micro insurance where, who's the distribution channel? What is the product? How complicated is it? Is it off the shelf or not for us? Is there a data source? There are many things, right? But I think the first question is probably, and I don't even want to mention two, is what is the business case? What is the need? Is there a need? What is the business case? What do we think? How many policies we sell? Can we price it adequately? These are sort of the things that we first ask ourselves.
Perfect, thank you. And then the second question, without a specific request in terms of panelists, but I think maybe Matthew, you can help us respond. Do we have any data regarding the current market in terms of volumes for parametric in Italy, in EU? and an idea of the full potential for the next 3 years. So we are talking about numbers. If we can help this attendee to have an idea of the current market size for Parametric in Europe and the growth potential for the next 3 years. Maybe Matthew, you can help us with this one.
Well, Yuri, I think I might pass that one back to Johnny. Do you might have more view on that? I mean, what I would say is if you distinguish between the established insurers from the newcomers, it's still very low. I mean, it's going to be we're going to be looking at probably tens of millions of euros, I suspect. What I would say, though, that for the more traditional catastrophe bond market, where about 15% of those are parametric, and there's about $100 billion of risk out there in the insurance-linked securities market. So there's quite a large volume in that area, but I don't have the figures in front of me specifically for that question for Europe, I'm afraid.
Okay, no problem. Gianni, can you help us with this question, or differently?
It depends a little bit on how you look at
the panelists.
Yeah,
sorry.
It depends a little. So it depends a little bit on how you look at it. So are derivatives included, yes or no? The difficult part is there is a lot of B2B business that we are not even aware of. And that makes it very difficult to establish what the amount is. It's simpler if you just add up, all the products that you see in the market. I usually look at the protection gap. So, where are people not buying insurance? That's a little bit simpler because, we know more or less what the uninsured losses are and where they're coming from. And then you see what the potential is, rather to look at what is already out there. That's really difficult. I couldn't give any figure. I think Matthew was totally wrong there, but it really makes a huge difference if you include derivatives, yes or no. I wouldn't, because I don't think it's an insurance product in that sense. I would focus only on insurance here, and then the number is not huge, but I wouldn't know.
No problem. That's fine. That's perfectly fine. Okay, so thank you, everybody, for being here. Thank you very much to the panelists for their time, and thank you to the attendees for attending the webinar. I hope it was interesting and we provided value to the attendees, and looking forward to the next one. Thank you, everybody.
Thank you, Yuri. Thanks, everyone. Take care.
Thank you.
Thank you.
Bye-bye.
Bye-bye. Bye.